Investors moving here, micro markets, 17 April. So will the 2008 happens again? So I noticed that both the VIX and the MOVE spike up together. So the MOVE is like the VIX for bonds, and then VIX is for the volatility for the stocks as well. Notice something interesting. So when both of these spikes together, the bottom is very near. So look at 2008. So then both of these spikes together, and then there was another leg down, but the end is near. And then eventually around 2010, there was another spike up again for both, and then it marks the near bottom again and again as well. For 2018, this looks pretty good. 2020 also decisive bottom. For 2022, so it's 2020. Next is 2022. There was another few months of leg down, and then market slowly goes back up again thereafter. It took about another 6 months or so, I remember correctly. For the previous one that we have experienced so far was August 2022 or August 2024, Japanese yen carry trade. And right now we have seen this spike again. So we be able to go up from here, only times will tell. And for me personally, I believe that there would be another 1 to 2 wave down. The reason why is because this whole crash begins because of the trade war and also uncertainty. Since uncertainty still remains, as long as Trump is in the office, there would be uncertainty. Businesses aren't able to plan for their business plan. They can't invest in anything. They can't buy any equipment. They can't decide which country to build their manufacturing plant. So all this uncertainty, I don't think that the end is over. But then at the same time, the market probably has already factored in a worst case scenario. So we might actually trading sideways on a consolidation mode for the next 6 to 9 months. That's what I believe. While the market is very uncertain, it doesn't mean that I will personally stay out of the market total. And this is possibly a great season for the best risk to reward ratio, particularly for long-term investors as well. And if you are an options practitioner like me, then you're not selling options right now. It's actually more risky. Whenever we sell options, we're able to lower the break-even point. We lower break-even as in every time we will have a certain P&L, profit and loss. So when we sell options, we get paid. We are lowering the average cost, which means that we are getting closer towards break-even and even towards profitable. So not doing anything right now as an option practitioner, we actually be in a more unfavorable position. My action plan remains. I will continue to sell kangaroo cover call on my existing stocks to milk the cash flow, reduce break-even. Remaining cash, right now I do have about 17K left from my initial portfolio to do the evergreen wheel strategy, and also recently doing the inverse wheel strategy. Together, I'm trying to build this the true evergreen wheel strategy. And so I would do this to further increase my weekly cash flow and increase my profits as well. And then right now I'm building up my cash pile. So over the last 2 weeks, I've generated about, I think, $1,800 just to consolidate this cash pile. So even the market were to go up from here, and we have already seen the bottom, which means that my break-even point is already lower. I'm able to sell kangaroo cover call at a lower strike price, which makes it even more probable for me to reach and profitably as well. And then in the event the market will go down further and my remaining 17K has fully deployed and assigned as shares, by then I will have another batch of cash ready to do the evergreen wheel strategy again. So I'm just going to constantly regenerate myself through this entire thing, which is what I call the evergreen wheel strategy. As for the Fair and Greed index, right now we are back to around 14 already. But this is quite expected, right? Look at this trend line. Currently, we need to break this 25 mark, and possibly once we are able to hit, in fact, coming to this zone right now, if once we are able to hit above 25 mark, that's when I believe the market sentiment will switch. It reached 25, we may have another leg down, but then thereafter we may just go from there. So that is basically how I felt, and that's the reason why I personally believe that there would be at least another one leg down before we carry on. So for the rest of the report, you can go through and see which one is of a value zone for you, if it fits into your investment trading thesis as well. I'll see you again next Monday. Bye.